Okay, welcome. This deep dive is brought to you by Access Softek, the premier provider of digital banking solutions.
Glad to be here.
So today we're jumping into something pretty interesting we uncovered ourselves, actually,
Hmm.
about how families handle their money.
That's right. We did some digging, called it the intergenerational banking divide. And, well, the goal here is to unpack one really surprising finding from that.
Yeah, and explore what it actually means, especially for banks and credit unions today.
Exactly. Building those family relationships.
So let's get into it. We were looking at family banking habits, and honestly, something really counterintuitive emerged.
Hmm.
We found that families, parents, adult kids, they often actively choose not to use the same bank.
Yeah, it's funny, isn't it? Sometimes they deliberately pick a different one because it's not where the rest of the family banks.
Which kind of goes against the grain, you'd think, right? Like you'd expect families to stick together, financially speaking.
You would. Inertia, shared history, all that.
Hmm.
But nope, our research showed this deliberate separation happening quite a bit.
So we started digging into the why. Why is this happening?
Yeah, what's behind that?
And a few things came up. For, say, young adults, it seems partly about, striking out on their own financially, independence.
Making their own mark,
Mm.
not just following mom and dad's banking path.
Exactly. Or maybe they just found a better deal somewhere else, better rates, maybe a slicker mobile app, something that just fits them.
Sure, different needs, different priorities. And sometimes, let's be honest, it's probably just about privacy within the family, too.
That's a good point. So it's not necessarily like rejecting the family's bank out of spite.
No, probably not usually. More like asserting their own identity or just finding a better product fit for where they are in life.
But this separation, while understandable, it does create a challenge for financial institutions hoping for that multi-generational loyalty.
It definitely does. But, it's also a massive opportunity, I think. Well, an opportunity for those institutions that can actually understand these dynamics and then, crucially, figure out how to genuinely support families banking together, even with this desire for individual control.
Okay, so supporting families banking together, but how? Because the traditional joint account, that doesn't really seem to fit the bill here, does it?
Not really, no. Our research pointed pretty clearly away from that simple model. It just doesn't offer the nuance, the flexibility people seem to want now.
So what is needed then?
Well, what's needed is a really solid digital banking platform, one that offers very specific granular permissions and controls, much more detail than just all or nothing access.
Right. That seems to be the key, the technological foundation.
Absolutely. That's where we think the bridge can be built. I mean, think about the specific examples that came up, things traditional accounts just aren't built for.
Like the college student example.
Exactly. The college kid. Maybe a parent wants them to have, say, $50 a week they can spend freely, no questions asked, coffee, snacks, whatever.
Giving them some autonomy. Makes sense.
But then, for bigger things, textbooks, maybe a flight home, the parent wants the kid to be able to request approval, maybe up to another $100, $200 a week, something like that.
And maybe there's an overall monthly limit, too.
Could be. Yeah. See? You need layers. Different permissions, spending limits, approval workflows. It gets complex fast.
Way beyond a standard joint account.
Totally. Or think about the other end of the spectrum, helping an aging parent manage their finances. That's happening more and more.
Right. So the adult child might need to step in, pay bills, manage transfers.
Full access needed for the child, basically, to make sure everything's handled. But the parent,
They still want to see what's going on, all right? It's their money.
of course,
Mhm.
they should absolutely be able to log in, check balances, see where the money's going. But maybe they can't initiate payments themselves without approval. Or maybe not at all.
Again, it's about nuanced control. View only for one person, full transaction rights for another, maybe approval needed for certain things.
Precisely. It's not simple on-off access. So looking at these kinds of real-life scenarios, the conclusion we reached was pretty stark.
Which was?
That the ability for a bank or credit union to actually support these modern family banking needs, it hinges completely on their digital platform's capabilities.
If the tech can't handle those fine-tuned controls, the spending limits, the approvals, the different access levels,
Then they're fundamentally stuck. They can't really serve families the way families seem to operate now.
yeah.
It turns that challenge we identified into a very clear technical requirement
Yeah.
and a path forward for innovation.
Okay, so wrapping this up, here's something to chew on, thinking about everything we've discussed.
Yeah.
If banks and credit unions can actually get this right, if they can build and successfully offer this kind of flexible, granular, family-centric digital banking. What happens then?
Interesting question.
Could it do more than just, bridge that intergenerational divide we talked about? Could it actually change the way families manage money together across generations?
From teaching kids to budget, all the way to supporting elderly parents.
Exactly. It really makes you wonder about the future shape of family financial life, doesn't it? Something to think about.